Hello, everybody. How are you doing? Can you hear me? Just wave. Good, good, good. I think that I hopefully will take you away briefly from the craziness that is happening in our country at the moment. Just to join us with Hannah, myself, John Fagan, CEO of Scribe, and Hannah will be giving you a full overview of budgeting and forecasting in these uncertain times. So before Hannah, hi, did someone say something?
No, it was just me saying hello.
Oh, yes, yeah, you should probably do that. Yeah.
Why not?
So Hannah is our head accountant at Scribe. She's been with us quite a few years now, about 5 years, and she's really grown with the company from a couple of hundred customers to 950 customers today. She has been training and supporting them, both small and large town councils. And really I think she has managed to solve loads of accounting issues. Lucky to have her on the team, and I think she's heard all kinds of questions, so she's perfect for this training today. So Hannah, I'm going to hand over to you.
Lovely.
And I'll see you all later.
Thanks, John. I'll end that poll. Interesting to see forecasting is the biggest there, and also council's understanding of the budget. So I'll talk a bit more about forecasting in the session. So I'm just going to share my screen. There we go. Hopefully you can all see that and hear me okay. So just as a quick kind of caveat before we start, so this is just a general budgeting session, run by us at Scribe, but it's not about Scribe specifically. I mentioned it very briefly, and like John said, he'll show you a bit about it at the end. But if you're a Scribe customer, and there's lots of names that I recognize on here today, so hello to you all, I've probably spoken to lots of you here, but if you wanted specifically to know how to do budgeting and forecasting on Scribe, this session doesn't really cover that. It talks about it a lot more generally. So if you'd like to, there's some specific sessions on Scribe Academy that you can sign up for. I think I'm doing one next week, so do look out for that if you'd like to. Okay, so off we go then. So budgeting and forecasting in certain times for town and parish council. So I did sessions like this last year, but obviously this time around, we've got a lot more to think about given the current status. And John said we maybe get away from that at the moment. We can't, because actually we've got quite a lot impacting us here. And obviously the government, and when I've done this session maybe a couple of weeks ago, just following the mini budget, we now have a different chancellor. Are we going to have the same prime minister when I do the next one? That's kind of where we are at the moment. So it's all interesting, and obviously having an impact on the considerations and the things that we have to think about throughout the session. So there'll be a bit of a theme of that as we talk about the general things that I want to cover as well. So firstly then, right back to basics, what is budgeting? Okay, so particularly for those of you, there were some answers there, lack of confidence and maybe feeling a bit nervous, particularly if this is your first budget for a council, given what we've just said about these sort of uncertain times. So generally then, a budget's a financial plan for a specific period of time. So generally it's going to be a year. If you're working for a council or you're working for a business, generally you'd work on an annual budget. If you're worried about that, thinking, my goodness, I've never budgeted before, you probably have, and that's simply at home thinking about, can I afford to go on holiday? Can I buy those shoes I saw in that shop? Offset against paying the electricity bill, paying the rent, paying the mortgage. It's all thinking about, how does all that tie in? What do we want to do? What do we need to spend money on? How are we going to fund it? And that's in essence the budget, and obviously the things that we need to consider when putting it together. Parish councils, regardless of their size, have a statutory duty to prepare an annual budget. So obviously we all need to be doing that right now to get that prepared and approved. And so the precept can be set before the start of the financial year. And all members of the council should understand the budget. So I noticed in the poll, that's a problem that you have. So try and involve them as much as possible. And it's sort of a continuous process of looking at the budget, monitoring the budget. And that's another theme that I want to get in today. So fundamentally at the moment, budgeting is really important because we need a precept. But actually, let's try and look at it that it's an ongoing process. We're going to monitor that budget on a monthly basis. At our meetings, we're going to be thinking about it. We're going to be using it to make good financial decisions. So if we can kind of get into that theme, then hopefully if councillors are exposed to it a little bit more, there'll be more of a consideration and involvement with it. Okay, then, so I've kind of covered a little bit of that, why it's important. Obviously, we need to set that precept, and that's our main goal, but it also gives you a good feeling of what's going on, flags up for potential under and overspend, to allow for corrective action, and particularly probably important at the moment, because not only we got to think about budgeting and setting the precept next year, we probably need to be quite mindful of where the budget's going for this year, given cost rises, and are we going to be overspent. So that's a sort of an additional consideration that we need to give to this year when thinking about our forecast, and we'll look at that in a little while as we move through. So briefly then, thinking about the budgeting timetable, just kind of a rough thought of where you're likely to be. Hopefully you've got your meeting scheduled in to review and approve your budget and your precept. So now you'll likely be working on, or getting ready to start working on, your budget, those different areas. If you have got departments, committees that you can involve, then obviously they should be working on their areas as well. Make sure you give them clear deadlines so that you then have enough time to put that information together, with the goal of hopefully November time, maybe resulting in a full draft budget. And then December, it says there, present budget at full council meetings. Reviews of the budget may happen prior to this meeting, and particularly with where we are, you may need more than one draft, and you may need to review them more robustly than maybe you have done previously. So make sure you've got that sort of factored in and thinking about those times, particularly for those of people who felt like they had a bit of a lack of time. Give yourself specific allocated time in your diary to do this. And I know it's really hard, particularly if it's just you and you're part-time and there's a million one things going on, but this is really obviously really important. And then January, precept agreed and submitted to the billing authority. Okay. So next then, budgeting approaches. Don't want to get too bogged down in loads of terminology, because some of it's not relevant, and some of, if you picked up a textbook on budgeting, a lot of it wouldn't make necessary sense here, particularly mainly because budgeting, if generally in a commercial business, if you came in under budget and made a, had a large budget surplus, then fabulous, you've got a profit, it's wonderful. Whereas in this scenario, that's not what the goal is. So we've got to kind of take the bits that are relevant to us and think about how it applies when we're thinking about council budgeting. So firstly then, sort of types of budgeting. It's likely that you may be doing these things and just maybe hadn't named it or thought about giving it a term. So incremental budgeting, traditional method of budgeting based on the current year and or historic data. So you're likely that you just have your current budget and then you'd add on a little percentage or an incremental amount. That doesn't, as it says there, it doesn't encourage in-depth analysis of the current budget. So it's not going to look in depth at what's going on, but if actually your budget's pretty good and you're monitoring your budget versus your actuals and kind of in line with where you want it to be, the structure is good, there's no huge fluctuations, and if there are, no sort of one-offs and unexpected things have happened, but generally the budget is working well for you, then often you would just put a small percentage on and off you go for the next year. Now, obviously, we've got to consider the small percentage might need to be a larger percentage, and we need to think about the lines individually. And I'd never suggest that you just took a budget and added on 3-4%, whatever it may be. But if you've got a fairly good, robust budget at the moment and the structure is working, then there's no point in reinventing the wheel and starting again. You can use that as your basis for where you're going to take it to next year. On the other end of the spectrum, if your budget isn't fit for purpose, then think about zero-based budgeting. And that basically means you start again. So you ignore the current budget, any previous budget, that goes in the bin, blank piece of paper, off you go again. And that might be for two reasons. Might be the format that doesn't work for you. Maybe you've had a budget for a very long time and it's never got any more level of detail, and you still report on quite broad headings, maybe open spaces, but you'd like to know, which the different areas, what do we do, or hedge cutting, trees, grass, whatever it may be. We need more information in the budget. So maybe it's thinking about the actual structure of the budget in the format that's not working for you. Or maybe when you're reviewing your budget versus your actuals, or you do a forecast, which is what we'll talk about in a little while, if all your budget lines are vastly different and are meaningless when you're trying to compare them, and it's not just because of genuine fluctuations of cost, it's because the budget's incorrect in the first place, actually, is it better just start again? So do you know what? It's better just to scrap everything we had before and let's build it up how we want it. So as it says there, obviously that allows for an analysis of all budget items, because you're going to have to think about those individual items, but it can be also useful for one-off or special projects as well. So you may want to use a bit of a hybrid approach if you've got sort of areas of the budget that work, and then you're going to do an additional part of the budget, or you're going to look at special project, installing a play park, whatever it may be, then zero-based budgeting might be relevant in some areas where you need to add or tinker with parts of the budget. Okay. So moving on then, we can think about forecasting. Okay, so I'd say forecasting is a really important part of budgeting, okay, because in an ideal world, we'd like to know where this year is going to finish, but we have to do the budget now, so we can't, you haven't got a crystal ball to March to look at it, so we need to forecast. Okay, forecasting is predicting future income and expenditure for the remaining months of the year to create the end of year position to assist in budgeting. You can use it with other information as well. So obviously you're going to have other information to assist you, but a forecast is a key element that you're going to be using. Now at the bottom there, it says it's used for budgeting, but also can be used to manage spending. So generally, I would talk about forecasting, have your forecast, compare against the budget, then to give you an idea of what you need to do for next year's budget. But actually, I'd also say this year that forecast is really, really key in terms of the end of year expected position to say, what does this year going to look like? Where do we think the budget is going to end up this year? Because we might need to make some considerations, because if we're going to be overspent on the budget and we need to dip into the general reserve, what does that mean for our budget next year? Or if we were hoping to use some surplus to offset the precept for next year, but actually we're going to use it up because we're going to be overspent in this year, how does that affect everything? So that's particularly key for this year, not only in comparison, thinking about next year. So forecasting, really important. So now we've kind of established that we want to forecast. How do we do that? Okay, so the half year point, April to September, is a good place to start, as it says there. And obviously now we're in October. That's fabulous. We've had April to September. We've got our data in. Hopefully you've got it on your cash book. You've reconciled it. So you've got 6 months worth of actuals. Now we can forecast October to March. Think about what to expect to happen in each of those months, predict those remaining budget lines. Okay, so it could be that you literally just took 6 months and doubled it, you'd have a forecast, but obviously that's not going to be very precise, very detailed. Work through it line by line in the same way that you're likely going to be working on the budget, and think about what are we going to spend in the remaining months of this year against these budget lines. And obviously, as it says there, some lines are going to be easier to forecast than others. You know what you're going to be paying for the phone bill, for example, for the remaining months. Some of them obviously going to fluctuate. You've got to think carefully about salaries because of the pay review that's going on, and thinking about back pay and what that's going to mean as well. So there's going to be an element of including that in this year as well. So all those lines and things to consider. So it's going to be a bit of work, but obviously the more that you put into it, the more detailed and accurate and precise you can be with what you're forecasting, the more useful it is. And particularly if you're thinking about looking at what this end of year position is going to be look like, if you do it now, then you can continue to do it. So once you've got October's actuals, you can update that information. You can then forecast and update any forecast from November to March. So keep using it. Don't just see it as this tool now for setting the budget and the precept. Keep using it, then it's going to give you a feel of where you're going to end up at the end of the year as well. Okay. So next then, this is an extract of a forecasting sheet I set up 3 or 4 years ago, and I've been talking to lots of clerks who found it hard, difficult to know where to start with it. At the time, we didn't have a forecasting function in Scribe, which we do now. So this spreadsheet was kind of sort of the precursor to what it looks like. And if we go forward, you'll see it's very similar in the function that Scribe has now. Okay, but in terms of the spreadsheet, it's just thinking about your different budget lines. You can see we've got our total budget there. We've got April to September actuals. So that's our 6 months of actuals that we were talking about that we're going to have at this point. And then we're going to forecast October to March. Okay, and once we've put all that information in, it's going to give us a total, and this is what we expect the end of year position to look like. It's then going to give us that variance against the budget. So we can start to look at that and say, look, we're going to be overspent. Does that mean next year we need to increase the budget, etc., etc.? You can see I've got a column for the proposed budget and some comments. So it's thinking about, what's going on, what do I need to change, what do I need to look out for? Some things may be known, okay, if you've got to do some additional work, different services, etc. And it's thinking about putting that information in, but the forecast should be your starting point to start to recognise what lines look like we need to address them. And obviously, as we keep mentioning, you may find that you may have a lot of forecasted items for this year that are going to look overspent. And that's a difficulty, okay, because at the moment we're at 10% inflation. I'm reading the Bank of England this morning. That's expected to continue for the next few months, but hopefully next year we're going to settle back down at 5%, with the view that we're going to return to 2% by 2024. So actually, hopefully the pain is in the remaining months of this year, and therefore when you're thinking about the budget for next year, hopefully we'll be working sort of with an easier 5% rather than these sort of higher rates. So it's all thinking about incorporating that information as well. So this is just an extract from Scribe as well, so very similar to what we've done, but if you put the information into Scribe, and John may show you later, this is what you'll get out of it. So it's and hopefully if you've got software, you can do something like that, that once it's given you information, you can obviously get useful information out that will then assist you in your forecasting as well. So then let's think about the actual budget process. Okay, so we've gone through and thinking about how we're going to budget. We've got our forecast, hopefully. So our forecast, and as I said there, other relevant data. Okay, so this is anything else that you need to know or be aware of that you're going to think about when you're working on the budget. Some things may be known. You may have cost subscription renewals, insurance renewals, things like that, where you know the price, and that's a nice, easy budget line. Okay, but anything else that you need to use to work on that budget. So when you're going through the budgeting process, then we need to consider the following. So starting with expenditure, because that's going to be the biggest element of the budget. What do we want to spend? Okay. Then we need to think about what other income are we going to get? You know, if we have other facilities that we charge for, what income are we likely to get from them that's going to offset the precept required? And we need to give consideration to contingencies and reserves, okay, particularly now that if we're thinking about, we might need to use some of that to assist us with budget overspends or increases to the precept, for example. When we're working through that, then there's some things to be mindful of as we go through that budget process. So level of detail, so I sort of mentioned about that, thinking about how much detail you want to go into. It's important to go to a certain level of detail, but don't bog yourself down in minutiae that's just, you know, taking it too far. Materiality, some of your budget lines are going to be big numbers, some are going to be quite small. Think about your stationery line, it might be hard to predict when you're going to need to buy paper, pens, paper clips, whatever it may be, but the line is insignificant really in terms of the value. So don't get bogged down in that. Things such as maintenance, things that are hard to predict, bigger budget values are going to take up more of your time, and that's absolutely fine. Some things are going to need to be worked on for a longer period of time. And have we got their cost of living crisis? We've got to think about, well, how that's going to affect the budget and the budget lines, and also our consideration of what the precept's going to be, given that our residents are also impacted by the cost of living crisis. What do we want to do regarding the precept? So there's kind of from both sides of it as well when you were thinking about it. So then thinking about expenditure first, as we said, so we can break expenditure down into fixed costs, so indirect costs or overheads, costs that are unlikely to change, generally easier to budget for. You know, the phone bill, we know what the phone bill is going to be every month. You know, it's easy to put those sorts of things in. Some costs will be known. So as I said, if you've got renewal prices and you can put that in the budget, then that's great. Generally, these are easier to budget for, but as we keep saying, we've got a bit more to consider this time, and you may need to put some bigger percentages on for what you might normally have done. But once they're in sort of a flat, easier thing to think about as you go through those fixed costs. Then we've got our reactive or our variable costs. So these are things that are hard to predict. So things like maintenance, such as I said, you know, you may have a level of maintenance that you do to your buildings or assets or whatever they may be that keep it at a certain level, but it's hard to predict, you know, when something's going to break. We don't know, you know, obviously you can consider the age of the asset, when was it last maintained, has it had some repairs, etc., when you're thinking about things. And these are all assumptions that you need to make, and I would recommend strongly that you keep notes of any assumptions and things that you've considered now as part of this process. Keep notes, because when you get to April, if you're doing it now, and obviously we've got to go through year end, and then April's going to come along and we're going to be thinking about the new budget, and you'll be bogged down in the year end process, it's easy to forget, you know, what did we decide? Why is that number this number? And you don't want to start your first council meetings in the new year arguing about the numbers on the page. You know, you want to be reviewing what's going on rather than trying to remember why that number is whatever it is. So these are ones to be the ones that take a little bit more time, and obviously you're going to have to make assumptions. As always, in any budget, it's not going to be exact, and you're going to have to think about those things. Also give thought to ones that have a relationship with other budget lines. So particularly where you've got income. So for example, if you have a venue that you're going to hire out, if you give consideration to that hire, and that's going to, you're going to say, we're going to rent it out maybe more than this year, for example. What does that mean for the associated costs of the caretaker, of the cleaning costs, the energy costs, you know, all those things, is the relationship between them. So you can give consideration to that. So generally this is a smaller proportion, but it's going to take you longer because there's more things to consider and there's more fluctuations likely. So that's the bigger part of it, expenditure. And then we need to think about income. Okay, so if you're a council where you don't really have any other income coming in, you do take the Precept and you might get a little bit of bank interest or donation, etc. That's not a consideration that you need to make about the income now. You can sort of move on to the next step. But if you do have venues, things you hire out, car park, allotments, whatever it may be, the other income is going to come from, we need to give consideration about how much income do we think we're going to get. Again, you can break it down. You may have some more specific guaranteed income that's easy to budget for. So if you rent something out on a long-term basis and there's an annual cost to that, nice and simple, you know what you're going to get. Okay, then you've got your other income sources. Are they likely to continue? Are rates fees to be increased? So a couple of years when I was talking about this, the consideration was all around COVID and how that affected, you know, hiring out of halls. We can't hire things out, venue, all that wasn't happening. So there's that consideration. And now we've got sort of obviously another consideration going on. Maybe with the cost of living crisis, do we still think people are going to use venues and go to events in the same way? You know, is that still going to happen? Are we going to need to put up the rates and the fees surrounding that because of the associated costs of cleaning and hire and energy, etc.? Are you going to put the fees up? So there's some considerations to that as well. And obviously, again, you're going to have to estimate those uncertain sources. So venue, hire, cemetery, whatever it may be, what do we think we're going to get in terms of income? Okay, so moving on then, contingencies and reserves. So this is obviously important, amount held for unexpected expenditure or cash flow. So you need to be maintaining your general reserve, generally equal to roughly 3 to 12 months expenditure, depending on the size of your council. If you're very small, then you should have 12 months because something happening can have a large impact if you're smaller, and if you're larger, it means more like 3 months. And as it says there, should be maintained at an appropriate level. So hopefully that's happening, but there may be some consideration about whether that's going to be impacted, as we said earlier, in this year itself. And when you're forecasting, does it look like we're going to go over budget for this year? And is that going to have an effect on things? Okay, so thinking about that element in terms of reserves, but also thinking about contingencies. So don't build contingencies into every budget line. There's often a bit of a temptation to want to put a little bit of sort of what I would, you know, fat in the budget to kind of cover you if something unexpected happens. But doing that on every single line is just going to obviously massively inflate the budget. But people get worried that they're going to go over budget, but actually you want an accurate budget because it makes your comparisons to the actuals more meaningful. So if you do want to put something in, have a contingency line, or just make sure you show those one-off unexpected items separately. It makes reviewing it much easier, particularly when thinking about budgeting for next year. If you haven't got to keep remembering, oh, that was a one-off, we don't need to consider that for next year. You know, we've replaced the boiler in the village hall, that's a one-off, we don't need to give consideration to that happening next year. So it's thinking about making sure we're aware of those contingencies and keeping them separately as well as we're working through. So in terms of specifically earmarked reserves or projects then, as we said earlier, zero-based budgeting may be useful. So if you want to set up for a project, work out what that might cost. You can go through the process of my play park example earlier, how much is it going to take to prepare the area, buy the equipment, etc., install it. Okay, and thinking about how that income will come in. And as it said there, those are the direct costs and also are the associated costs. So if you do install a play park, you're going to need to add a budget line for maintenance and inspections and think about what are the ongoing costs and do you need to maintain a reserve for that maintenance. So there's some considerations, and particularly if you have got a project or reserve that's been building up money to take place, maybe next year, for example, does it need revisiting in terms of the value and the costing out of it? Because given how the prices have changed, particularly for raw materials and other things like that, if you've worked out on a cost basis and you're working out on a certain amount that you need to get to, is that still going to cover the things that you want to do in that project? Do you need to revisit that calculation? Okay then, so now we're in a situation where we've thought about our expenditure budget. Okay, we've thought about what we want to spend. We've thought about what other income do we think we're going to get besides the precept. And then very simply, we can say, right, if we've got this to want to spend, but we've got this income, that will then result in what we need in terms of the precept. Okay, so the expenditure less that income, in theory, is what we need in terms of the precept. There's a very simple calculation to start you off. Okay, so example there in the middle, expenditure budget's 100k. We think we're going to get 20k of other income, and therefore we need to take a precept of 80. So 80k plus our 20k income is going to cover our 100k expenditure budget. So obviously that's a fairly simple example, but that's what the way we need to get you to think about what we're going to do. Obviously, if you've got a surplus, you'd need to factor that in as well. Once you've got to a point where you've got a precept calculation, you can do your calculation based on your bandy equivalent properties. Okay, so basically that is taking the precept and dividing it over your equivalent properties in your parish or area. That information would be provided to you by your district council, so you know what that information is, so you can work it out per property. You can then obviously compare that to the cost per property of last year, because the overall precept may have fluctuated, particularly if the number of bandy properties has changed. Maybe you've had some additional housing in the area, or there's been some revaluations, for example. It may have changed it, but the overall impact per property may not be as great as the sort of headline figures of the precept. Okay, so do that calculation to see what that looks like. So then this is sort of a new slide that I added in thinking about this year, because as I said at the start, it may be that you need to revisit the budget, and there's mainly some redrafts, because if you've gone through and said, look, you know, we've got a cost of living crisis, prices are going up, I've put the expenditure budget up significantly, obviously that may result in a precept that's gone up quite significantly. If it has, we need to think about, is that okay? If not, what do we do about it? Okay, so firstly, does the budget need revisiting? Do we need to go back and try and get that expenditure budget down? Do we need to look at how we can make some cost savings? Do we need to defer some projects, draw down from reserves, do something about that, about making that budget less? Can we offset it? So can we take some money from general reserves, or have we got a surplus, potentially, depending on what might happen this year, to offset the precept required? So do we need to do that? Or actually, does the precept need to be at the level we've calculated? It's justifiable, it's needed, and we just need therefore to tell our residents and that that's going to happen and how it relates to them. Okay, so communication is key if that's the case. Okay, so going back to the top thing then, so thinking about potential cost savings. So again, thinking about what we can do. And I think, like for all of us, I'm totally obsessed by not turning the lights on, making sure my plugs are turned off, and often it's probably going to be a drop in the ocean, but it's probably worth everybody thinking about, you know, how can we try and put some bring some prices and costs down. So things such as reducing consumption of energy. Okay, so obviously heating and lighting, if you have venues or places that are lit, or you know, outside of hours, or can it have automatic lighting that only comes on if somebody's there? You know, obviously working from home and that sort of hybrid as well, about those cost savings potentially. General office waste. So can you, if you print out a great lot of information every time you have a meeting, can you reduce that? Can we look at it on a tablet, for example? If you're photocopying, we do it black and white, do it in colour. So it's all these little things to think about. Obviously, there's a larger effect that if we defer projects or planned spending, but obviously that's going to have an effect on your residents. So these other things, and maybe thinking about just saving a bit of money, but it's not going to affect anybody. I did a session last week, and one of the guys on there was talking about his council, and they were going to put the precept up quite significantly because they wanted a speed sign in the village, and actually residents were happy with that because they wanted that more, and they were happy to pay more in the precept because that was more important to them than keeping the precept low. So it's that sort of consideration again about what that impact is. So then moving on, we can think about reviewing contracts and suppliers. That may be hard because obviously everybody's impacted by cost rises, but if you are maybe outsourcing work, can you bring something in-house? If you have an external accountant, can you get software so you don't need to do that? Think about those. Can you look into fixed contracts maybe, so that at least you know when you're budgeting what the prices are that you're working with, and maybe invest in more technology. So that might be software, that might be internet enabled phones, things like that. So things, as I said, can often seem a little bit of a drop in the ocean, and it'd be great at the end if anybody has any other ideas and things that maybe they're considering that they can share with us as we get to the end of the session. So moving on then, so just before I do move on, actually just thinking about that. So these are all the things you're going to think about. And as I said, you may need to redraft that budget. You may need to go through the process that we've done a few times just to get a feel for what's going to happen and make some drafts of the budget and considerations. It may be that you want to do sort of worst case scenario, extreme cost rises, 5%, whatever it may be, just to give you a feel of what might happen to the budget, to really understand it and get the draft. And as you do, notes are so key. What you've done, make sure you're obviously all on the final draft that you're using, and those notes of assumptions and decisions that you made. Okay, so just to finish off then, just want to talk about monitoring the budget, which is something that I mentioned at the start. So this session of thinking about budgeting at the moment is predominantly about we need to get a precept set. Okay, but actually it's a good idea to, if we can, to continually monitor the budget. Okay, so budgets versus actuals at your meetings going to help you get a feel for what's under overspend of budgets, and then you can make decisions making, you can take corrective action. So to do that, a good cash book's absolutely key. And lots of times I've seen people come and show me their cash book and join Scribe, and they've got a lovely budget and it's listed out areas line by line, there's a budget per line, it's great, lovely. The cash book bears no resemblance to that budget. It's just a spreadsheet of information. And if somebody said, what have we spent against this budget line? Don't really know. It's in there somewhere, but we have to do quite a lot of work to extract that information. So cash book, absolutely key. Like we said at the start, if you put good information in, you're going to get good information out. So set that cash book based on those budget lines so you can easily produce this information. And as I said there, notes, I think notes are really important, not only because I've generally spoken about notes in terms of keeping record of what you're deciding for the new budget, but actually really good to keep notes throughout the year as well. So the things, I need to be aware of this when I come to this budget time. So at the time now, when we're going through that process, you maybe have got just a list of things to consider that you've thought about throughout the year to remember, I need to remember to think about that. I need to remember to add that additional service, and this is going to change, whatever it may be. And just have little memory aids just to help you to make sure everything's included. Really, really important. I'd recommend that you definitely do that. Just a little extract to finish off then of the summary report in Scribe, and just showing how the cash book is set up, and we've got those lines in there, and because we're allocating information to those codes, we can therefore see the variance, and it's easy to report on. So that's just something really important to think about, and how important a cash book is, information to get information out. Okay, and that takes me to the end of it, so I will stop sharing.
Cool.
Thank you. Back to John.
Thank you very much, Hannah. We've had a few questions and we'll go into the Q&A section in a minute. So this is highly dangerous. I'm going to be showing a little bit about Scribe and how budgeting is handled. So I think one of the key things there, so I'm not an accountant by any means, I'm more of a geek. But yeah, I think the important part is doing your budgeting is not a snapshot in time, so you initially do a snapshot, but you have to ongoing monitor against that budget, including having the forecasting element in there. And actually, I haven't really played around with the budgeting in Scribe too much until today's session. And yeah, it all looks pretty straightforward. So got a budgeting menu there. The first thing you would do is get a similar view to a spreadsheet. You've got all your cost codes and cost centers here, which structures all your receipts and payments, income and expenditure. And then you can basically go and set the budget there for your income and expenditure, your payments and receipts. And then you can choose whether you want to spread that monthly, spread that quarterly, or spread that manually, because you might have different peaks and troughs. You might not spend the same amount of money or get the same amount of income spread across a month. So you can actually go in there into an individual cost code, and there's this ability to flex the budget there, so you can go down there and distribute it according to that spend. So that's kind of setting it all up, and then you can choose how you want to forecast it based on your actual budget that you've inputted in here, or your year to date, or the monthly amount, or your actual flex forecasting. So once that's in, it's in the system, and then as you go through each week you're adding your receipts and payments, and you're doing your bank reconciliation, and then you're able to monitor your budget and against your actuals. So that's all possible. There's a bunch of really good reports of the budgeting here. This one's a 3-year one. I don't actually know how the future one works. I guess you can start putting in your budget for next year already, but here you got your last year, current year, and next year, and then you have your budget and your actuals, and then also you can drop in the forecast there as well. So that's a pretty good report. I like the monthly report. I'll turn off forecasting for a moment. So that is that's kind of your receipts and your income and your payments. This one, your payments out on a monthly basis, what's actually happening and where you stand against your actual budget. So originally it was 12k there, 8,531 spent, so you have that available. So it's looking pretty good at the moment. You'd say, okay, no issues there. But then if you put in your forecasting, add that, then there's actually potentially a bit of a problem. So we've forecasted the remaining months, and then we might be under 1,500 quid there. There's loads of other reports in there. So yeah, it's all really, you could actually use this. I could actually use this for my personal budgeting at home. But anyway, there's other things we can share. So that spreadsheet, I dropped a link into it in the chat. Feel free to download that. If you're not using an accounting package that supports budgeting, you can do this. But again, this is like, it's good to get going, but it's a static snapshot. The importance is doing the ongoing monitoring and getting the real-time view of where you are, your current position is. And that's probably really, it's more important than ever with the fluctuation in the economy. I'll also share this blog post with you afterwards. This is actually, Hannah wrote a full blog on pretty much everything she discussed here there, which can be good. We've also done some 15 tips to combat the cost of living crisis. I'll share that with you. Or you can just go on to Scribe accounts and visit our blog. Actually, don't even know where our blog is. Linked. Oh, there it is, support blog, and you'll see all our blogs there. So you could go there right now. And then, if you are really needing extra support for your community, if you're not already in the Clerk's Corner Facebook, there's lots of people there's always a very active group there. If you post a question, you'll always get, loads of responses, people trying to help you. Got one for the Councillor's Corner there. So I'll drop links to that. So, and then also, we've got a whole bunch more Scribe Academy events. We're calling it season 3. So we're attending this one right now. We've got management of memorials at the cemetery, another budgeting one, managing conflicts, grant funding, that's going to be popular, and then how to clerk smarter. So there's much events there. So I'm going to go take it to the floor to get those questions. I think there's been a few more questions coming in. It'd be great if you can actually ask the questions. So, put on your camera and unmute yourself. Carol's asked a couple of questions. I don't know if they've been answered for you already, but Carol, you had one about materiality and the precept. Yeah. Carol, are you there?
Yes, I am. Yes, I just don't know what materiality means.
It's basically just the amount, really. So it's just thinking about, if you've got big budget lines, then you're going to have to give more consideration to getting them more exact, because if your stationery budget's wrong, it's probably going to only impact you on £50, £100. But if you've got a large budget for maintenance, for example, obviously if that's a lot bigger, then that's going to have a big consideration. So it's just the importance of it is all that means.
Thank you.
Lovely.
Great. And then we're going to go to Mark Knockert. You had a question?
I think it's been kind of covered already by Hannah in terms of the contingencies. So I got the impression, just correct me if I'm wrong, that contingency just keep it as you do normally for one-off projects, and then just make sure you get the sort of inflation and increase built in your cost.
Yeah, just kind of create those separately, because it just makes the whole budgeting process easier if you've got those contingency one-off unexpected items separately, and then they're not getting lost within other budget lines.
Thank you.
Super.
Cool. Philip Farquharson, did I pronounce that correct?
Yeah, more or less. Yeah,
more or less.
So yeah, it's about how do you like spend an EMR? Do you if you've got an EMR, do you attribute the cost, you know, that month, or do you wait until year end and then cancel it out, or do you move an EMR into a budgeted line?
So likely that you'll have your preset budget that you're dealing with, and then you'll have your pot of money in the earmarked reserve, and then that really depends on, you know, what you're doing, how long the project is for, and when it relates to. So obviously, if it's something that you're going to do the project in the entire year, then that pot of money is available for that whole amount of time. But if not, you'll just use the amount that you need, and the pot will keep rolling on. So that's kind of a separate consideration to your general budget, whereas a normal preset budget is an annual budget for that year. Once you've finished it, you stop and start again. And then I've frozen, I don't know. And then next in the reserves, they continually go on. Did you lose me now? I don't know if I froze.
No, audio is perfect. Yeah.
Good.
So do you you know, put the expenditure on the accounting software on the system from the EMR, or just
is this a Scribe, or is it a general sort of, are you on Scribe on it doing it, or?
Yeah, well, I'm not on Scribe, but I think it's probably the same on Scribe, isn't it?
Yeah, so on Scribe, the way it works on Scribe is you'd have your pots of money in reserves, and you link your cost codes to reserves. So when you spend against those codes, it takes it directly from the pot. So it's coming from the reserve rather than the general reserve, the general fund.
Right. So it does come out of the EMR line?
Yes. So you want to see that spend coming from there, because you're spending against what you've earmarked, not your general fund.
Thanks.
Yeah,
thanks.
yeah, lovely.
Cool. Cheryl Day. Are you there?
Oh, hi, Cheryl. I think you're muted still. You should be able to toggle it bottom left.
There we go.
Hello.
So I'd asked about if we've got a surplus at the end of this year, because my first precept and budget was last year.
Yeah.
And there's been a few things that just haven't got off the ground. So we're going to end up with a surplus at the end of the year. So do we have to use that towards the precept calculation for next year?
No, you don't have. Generally, you'd have a budget, and then once you've had that budget for the end of the year, you would scrap that and start again. But the consideration, obviously, this year is that if you are going to have a surplus and it's going to go into your general reserve, and that's just going to push it up maybe at a level higher than what you need to maintain it at, do you want to use some of that surplus to offset the precept for next year? Because it may be that the precept calculation is significantly higher, given if you're going to put all those percentages, increases, etc. in there. So you don't have to, but it's obviously mindful of maintaining that general reserve, because if you went through lots of years where you continually had a budget surplus and you didn't earmark that money that you were receiving, you then end up with a very high general reserve, and that would be a problem, because that's going to then get questioned by the external auditor. So it's just thinking about what impact that might have if that continued.
Yeah. Okay.
Lovely.
I've got another quick question, if I can sneak in. Have we any idea what percentage we need to add on for staff costs?
So it's still, I think, in agreement, but at the moment it's basically £1 per hour is the easiest calculation if you work on that basis. So that's currently something kind of come in from April. So if the current scenario, if it's agreed, which is happening in the next few days, I think, but then it's got to be implemented, it would be £1 an hour increase. So, but you're going to have to think about back pay from April. So if when you're forecasting, you're going to have to obviously put the impact in for that. And then going ahead for next year, obviously we're on £1. So, but then if you're thinking about there may be an increase next year as well. I was talking on the last session, and it was felt that a lot of people were going to just go up to the next pay scale to use that point for next year, but it's £1 if it goes through per hour. Basic calculation.
Thank you.
Perfect.
Cool. Sue Todd.
Hi, can you hear me okay?
Hi, Sue, yes.
Yeah, my question was just about the Band D calculation. So some of the council members think that if you put your precept up by, say, £1,000 and you've got 300 houses in your village, that they're all going to get a third of that £1,000 added to their directly to their council tax. But I know it doesn't work like that. How do you work out how
It's the equivalent. So bandy is kind of in the middle. So there's a calculation that I think once you get to H, that's like 2 bandies, and A is like a proportion. So I can't tell you off the top of my head, but hopefully there's some information online somewhere that will tell you that, you know, an A is like half a bandy or something, and an H is 2 of them in the equivalent. So that's why it's bandy, because that's the middle ground, and it's worked out based on the total number of equivalent ones.
Right.
Sense?
Yep, that's fine.
Yeah,
Thank you.
yeah, perfect.
Cool. Yes, I think that's all the questions I had. We'll open it up to the floor. If you want to ask a question, I think you can just unmute yourself and ask it. I don't think it'd be too chaotic. Yeah, does anyone have any more questions? Angela, I see you put your hand up. You're muted, Angela.
Okay, hello there.
Hello.
I've got a lot of money in earmarked reserves at the moment, and I've tended to have inherited the general fund and then a pot that would take into account, say, you know, we've got £1,000 in there in case we don't get the donations on the beach clean, and you know that would sort of take care of a little bit. So when it comes down to the end of year audit, the balance shows that I've got a bigger pot in the earmark than I have in the general fund. So obviously I'd like to be able to have council approval to shift some of that over. Is that a simple thing of when a payment comes in, I actually take it out of the general reserve, or do I ask permission to take the money out of the general reserve to put it into the general fund? Do you know what I mean? Because all my codes are sort of linked, aren't they?
Okay, yeah, so your general budget spend will be just from the general reserve, but if you've got something specifically from an earmarked reserve, yes, provided it relates to that, then you can obviously take that money from the pot of the reserve to apportion to that item. So particularly if you're Scribe related, if the code is linked to the reserve, it'll automatically take it from the reserve anyway if you've linked them up, so it will do it for you.
Yeah, I've got a large amount of community infrastructure levy money that has just come in that I didn't know I was expecting. And so that will almost bump it up even more. And
it's tricky, but it's fine to have reserves. If you know, if you've got a lot of earmarked reserves, and there's a lot of them, you'll get questioned on it if you've got more than double the equivalent of your precept when you get to the year. But providing you can answer the question as to why you're holding them as reserve, and it's not just a great big slush of general reserve with no idea what to do with it, that's absolutely fine. All is a list of what they are and what they're, you know, what the value.
That's okay, that's fine. Thank you.
Great. Kate's dropped a question. Are you there, Kate? Pardon? On the chat?
Yeah, I'm here. Yeah, thanks.
Do you want to ask it?
I'm just thinking about the assessing income this year. Unfortunately, we've had a lot of income in from our cemetery, which I wasn't obviously expecting, and which I'm not happy about, obviously. But what's the advice regarding, you know, assessing the income because we've got the cemetery?
What, in terms of calculating what you think you might get, do you mean?
Yeah.
Well, obviously that's a really hard thing, and particularly in terms of the cemetery, obviously, you know, it's not a nice thing to have more income from that, because obviously we know that means. So it's just going to maybe have to be on a sort of a rolling basis of what you normally get and kind of work it on that. So like we talked generally, a lot of the budget lines that you're going to be working with are assumptions, and they can only ever be an assumption. You can't ever, you know, forecast exactly what, or budget exactly what's going to happen with them. So you just have to make that assumption, probably in that scenario, based on what's happened previously. And like I say, just keep records of those assumptions and decisions made, so that you can say it's based upon, you know, this scenario, so that you've got that record. But it's many of them, it's going to have to be based upon estimation. So.
All right, thanks a lot. Can I just ask quickly? Earmarked reserves and ordinary reserves, do you have to have two income codes for these different ones, the earmarked ones and the standard reserves?
So what is that? Scribe? So it's on Scribe, they're linked up. So if you have, I would have a separate reserve with a separate code, and if you put income to the code linked to the reserve, it will go into the pot straight away. So if you've got money that's going to be put away into a reserve pot, I would have a separate code to your general income section that goes into that reserve. I've got one for a special earmarked thing that we're doing at the moment, but not one for general. Should I have a general one? Well, you're probably likely to have your general income section that where general income comes into it. You can always transfer it if it comes in and then there is a decision made, so we've had this income and actually we're going to put it in this pot. You can then later on do a transfer anyway. So I'd probably see it as general income if you don't make a decision initially, and then you can just do a transfer at a later date into the pot if you want to keep it as a specific reserve.
All right, thanks. Yeah, thanks, Hannah.
Super.
Great. Any more questions? No more questions? Well, thank you, Hannah.
No
You
problem.
handled
yes.
all.
Yeah.
One more?
Oh, Carol's back.
Carol.
Yeah, sorry, I was trying to unmute. Just a quickie, I've not entered anything into the budget at all yet on Scribe. Is there a guidance on Scribe showing me how to enter?
There is, yes, I'll send you some links after the session, actually, Carol. There's a little bite-sized video on YouTube that's about
That's the word, yes.
yeah, lovely. I'll send you that. And there's also a help guide, but I'll pop over adding in budget stuff.
Okay.
Lovely.
Thank you.
Great. Yeah, yes. Thank you, Hannah. She handled all those questions. She has wealth of knowledge, all those experience. And also Jessica, thanks for responding to all the chat. And everybody else, have a really good day and see you at our next Scribe Academy event. Bye-bye.
Bye.
Cheers.